Rob Luna knows this stuff inside and out, the Real Talk Capital CEO. You know, Rob, I immediately think as Connell was speaking, if you're not paying for this service and you're just a regular customer, is Meta coming back and saying, well, you know, you're vulnerable?
Yeah, I mean, I could tell you as someone who's currently verified on Instagram, wasn't before, you know, there's a lot of shenanigans going out there, Neil. You know, I had so many people trying to use my name, DMing people to say we've got a new subscription service. There's a lot of fraud going out there. So I think especially for people who are trying to promote businesses out there on Instagram, this could be something that's good for them. But I agree with Connell. I think this is just ripping a page off of Elon Musk's book. But at the end of the day, it's all about that subscription-based revenue. So I think you're going to continue to see more of these types of services that are going to be offered.
You know, I have been seeing as well, Robin, and you were the first on this not so long ago with the various streaming services and some adding, commercials or ad content to either cut the price or charging you a little bit more to not have any of that. So it's permeating the entire industry. I'm wondering where this goes and whether a lot of customers will say, what I used to get for free or thought I got for free or thought I was covered for free, I'm no longer, and it might boomerang.
Yeah, I mean, I think at the end of the day, it's probably not going to have a major impact for people who aren't extremely active on social media, again, who aren't trying to monetize it. But I think, you know, today, Neil, with this gig economy, everybody's becoming a social media influencer. Everybody's trying to create content out there. I think people are, if they're not there yet, they think they're going to be there. So I actually believe this is probably going to be something that is accretive, that you do see to gather some steam with Meta, Neil. And look, at the end of the day, there's some kind of, prestige around having this blue check mark next to your name. So I think we're going to see a lot of people putting that up on their profiles.
You know, I'm wondering what you make of technology. Markets are closed today, obviously, for President's Day. The futures have been generally down throughout much of the day. But there does seem to be a sort of a comeuppance feeling that the Federal Reserve is not done. There have been hints from a number of voting members of the Federal Reserve Open Market Committee, the folks who set interest rates, that if they had their druthers, the next hike would be a half a point, not a quarter point. That would be bad for technology as well, disproportionately so. I'm just wondering how you see this sorting out.
Yeah, I mean, look, and I think we could see that 50 bips. It's not priced into the market right now. The next 3 hikes are supposed to be a quarter, and they're actually, I believe that's going to, come back down a quarter in December. The challenge, though, Neil, as you know, we have the lowest unemployment rate since 1969 at 3.4%. So that's giving the Fed a lot of cover here. And just like we saw last year, I think 4% is kind of that line in the sand. Once you start to see that 10-year get near there or tick above that, that's going to be a lot of headwinds for the technology stocks. And if you look at some of these names, the more aggressive names like the Cathie Woods portfolio, those names are up 38 to 40% year to date. So we're at a point in the market right now where if you see the Fed get a little bit more aggressive than most people are believing, be prepared for a 10 to 15% pullback in those technology names.
Yeah, and even with the comeback that she's enjoyed, I mean, she's still down a lot year over year. So. Yeah. We'll watch how that sorts out. Rob, always good seeing you, my friend. Thank you very, very much.
Thanks, Neil.